How you doing? How you doing? Sorry for the slow reply. I would have replied earlier, but I've had to, been around. Okay, so your question is at what point can you break even on your trade? Okay, I'm going to also use an example from the trade I took last week. That is the NFP trade I took with USD card to explain this because I think that's a personal question. But let's look into the word break even. What does it mean to break even? It's simply saying you have taken out the possibility of a loss on that particular trade and you are willing to accept any outcome. So you're on break even. Break even is that you're not in the position of taking a loss anymore and you're looking forward to what comes after now. So when you take a trade first, there's the possibility of hitting SL or going in profit. So when it goes in profit now, this concept is kind of like saying, okay, let me take out something and then break even. That is, take out something, cut out your profit and then put yourself in a position where you don't have to worry about losses anymore. Whatever happens to the account, you're safe. So, how much did you risk in the first place? That has to go into how much you're willing to lose, right? But at the same time, if your trade is at a zone where you know that a reaction is a must, not certain that where you are expecting it to get to, you understand, but a reaction is a must, like with the trade I took on USD card. Why I was holding my losses was because I knew a reaction was a must, not just due to technical analysis, but looking at the sentimental aspect and the fact that NFP was coming out. That particular week, the market was already overbought. The price was very, very overbought, and my SL was at a safe point, which was the daily swing high. So I was not expecting them to clear out that high. But that was my invalidation point. So at what point do a price get invalidated, or at what point do this setup becomes invalidated? For me, when a certain high on the higher time frame is broken with a body close above it, or a certain low with a body close below it, that's a confirmation that that market is moving in that direction. So that daily swing high was my invalidation point. Then coming down to my first take profit, which would be where I would want to break even. Normally, I start the trade with a higher risk when I have swing confluence, like confluencing the higher time frame with the lower time frame. So I use high risk. So what I do is that when I get a reaction over 30 pips, I take out some lots, which is cutting my risk and then putting myself on break even. Why I'm on break even is because I used high risk initially, and the profit I'm cutting out is to put myself on a positive side. So even if I get stopped out, so remember, break even doesn't guarantee that you're going to hit TP. It's just saying that you're willing to accept whatever comes. So even if I hit SL, I'm not worried because I already took out something and I'm on break even. So losing the trade won't be losing at all. It will just be breaking even. That is taking out something and just being on the safe side. So it's all about how much did you risk in the first place and how much are you looking to make. So if you can answer that question, normally I would just say um, um, the nearest swing point, which is either the internal structure or the external structure. But that's based on technical analysis. You understand? So the closest would be based on technical analysis. But at the same time, psychologically, it's based on how much you're risking on the account and how much you're looking to make. So for me, that's when I feel is the break-even point. That point where you take out something and then hold the remaining ones for whatever comes next. But at the same time, where you break even has a lot to do with where you place your SL. So I just told you where I placed my SL and how psychologically how I approach the concept of putting your trade on break even, and that's how I stay on the safer side when I'm not yet on break even because my SL is on the swing point on the higher time frame. So whatever happens on the lower time frame is just lower time frame manipulation. Anything can happen, and it will just look like a week on the daily. So that doesn't mean the setup is validated. It just means that the lower time frame was liquidating. So to be on the safer side on that aspect, my SL is always at the swing point of the daily or the 4 hour, depending on what time frame I'm trading. And then my break even point is, maybe 30 to 40 pips in. That is when I can take out something based on my high risk and then, lock the remaining one for whatever comes next.